Hello again and welcome to Money Matters. After 2 years of turbulence, the Hong Kong Monetary Authority's number one job is to reassure the banking and financial industry that the system will remain stable. In an exclusive interview, the authority's chief executive, Eddie Yu, talked about how they plan to accomplish this, as well as other projects in the works. Eddie, Hong Kong has seen a lot of upheaval with the protests in 2019, followed by the pandemic, and then the national security law, and most recently, annexes to the basic law. How do you ensure foreign companies that Hong Kong can still maintain its status as an international financial center?
And I think Hong Kong has proven that in the last 2 years, despite all that's been happening, our financial system has been remarkably stable. If you look at the exchange rate, it's been leaning on the strong side of the trading band. In fact, there were inflows in the last year amounting to some $50 billion US dollars. Deposits have been going up. So despite all that's been happening, Hong Kong's financial system is very resilient. And apart from financial stability, what they also value in terms of a financial ecosystem is things like free information flow, free capital flow, common law system, independent judiciary, a good talent pool, etc. And from the feedback I got, all these remain sound and intact. Nothing has changed. So the financial ecosystem is still very conducive to them continuing to pursue their opportunities here. If you look at the overall picture, if you look at the asset management firms, for example, in 2020, the number has actually increased by about 4%. We've now got about 1,900 asset management firms here. But of course, there could be firms that might be leaving. Some that we know, because we know most of them, being an investor ourselves. Some are leaving for strategic reasons or for business opportunities. If you're an activist shareholder type of hedge fund, you might actually want to pursue opportunities in other markets than in Hong Kong. But there are others coming in, especially given the vibrant capital markets in the stock market, for example. So there will be people coming in and going out. In terms of assuring the international financial community, I think one, communications is important because it's all about confidence. In terms of foreign reserve, we've got more than 500 billion US dollars. There's a lot of buffers in the banking system in terms of capital and liquidity. And thirdly, we have to make sure that both ourselves and the financial institutions are good in contingency planning, and we stress test them.
So Hong Kong does remain a major financial hub, but does it then become China's international financial hub, both in and out of China?
Right.
And how strategically important would you say this is?
Well, Hong Kong has always been the dominant financial gateway to China. It was and it will be. And this is important in that Hong Kong has always been serving as a bridge between the East and the West. If you look at the two Connect schemes, for example, Stock Connect and Bond Connect, yes, you are talking about the mainland capital markets. But on the investor side, you're actually talking about international investors wanting to diversify their portfolio and wanting to get a dip in the mainland's capital markets. And they do it in Hong Kong. And that actually brings not only the mainland talents coming to Hong Kong, but also international talents, because with this move by international investors, including the inclusion of the mainland stocks and bonds into the international indexes, there's actually a need for many international firms to bring international talents here to serve their investors.
And what role can Hong Kong play, given that the U.S. is still cracking down on Chinese companies listed on the New York Stock Exchange? Do you see more Chinese companies IPOing in Hong Kong and also in China, and more money coming in because of this?
Hong Kong, as you said, is a place where they feel that the system is robust, where they will not be subject to different threats, and they might come back, and we welcome them. Hong Kong is a very open place. We set up our own financial system in the internationally aligned way, and we welcome any companies, whether it's Chinese or overseas, to come to Hong Kong to list. But this trend, I think, will likely continue. And because of the international investors' interest in Chinese assets, And I think that there could be international capital coming in to subscribe to these shares, and you can see that many of them are actually very well subscribed. So I think this flow of capital might continue in the next few months.
Are there any risks if we start to see some tapering out of the U.S.?
This is actually the biggest risk that is on the horizon that is giving me some concerns. Because what you're seeing now in the financial market is partly due to the very low interest rate environment we're in, partly due to the very expansionary, accommodative monetary policies by central banks. And if there is a disconnect caused by the very low interest rates, if there should be a change in that monetary policy direction, whether you're talking about tapering, reducing the bond purchase, or even thinking about interest rate increase because of inflation, then I'm afraid that the financial market reaction could potentially be very large and very fast. We've seen the episode in March last year. We've seen the contagion going really fast. In the next correction, there could be a possibility that the correction can be faster and deeper than what we have previously experienced. And also, when we see tapering, the only experience we had was in 2013 with taper tantrum. At that time, there was quite a big outflow from the emerging markets, including Asia and Hong Kong. So if the scenario that you talk about happened, it is possible that there could be outflows from Asia. And this is something that I think we and the financial institutions and the investors have to be very prepared for. For us and the financial institutions, it's really about enhancing your buffer, preparing for contingency. And for the financial institutions, we stress test them with very brutal parameters, so that we make sure that in the event of a big shock, the financial system is still all right.
With QE and with the Hong Kong dollar pegged to the US dollar, it is bringing the valuation of the dollar down, and it's also making local assets more expensive. I mean, is there a room for some fine-tuning, you think?
If you look at the last 2 years, when Hong Kong was going through all the different challenges, the one thing that has not been shaken or doubted was our exchange rate stability. And it was primarily because of the very strong market confidence in the linked exchange rate system. So it's been operating well. It's been instilling strong confidence in the international financial community. So we see no need and no reason to change it.
The HKMA has managed an exchange reserve of 400 to 500 billion so far. Are we going to dip into this at any point, given some of the difficulties Hong Kong is seeing right now?
I think it's actually important to keep a very strong buffer to protect financial stability, especially when Hong Kong is going through these challenges. And it is to really cement the confidence of the international financial community about financial resilience in Hong Kong, no matter what happens. And I think it's important to keep that ample buffer instead of, as you said, transferring it for other uses.
But I mean, Hong Kong is seeing its highest rate of unemployment now, and there's no help for the unemployed. And some of the smaller businesses also need help. At what point do you say, okay, we're going to use our buffer, we're going to use some of this emergency fund?
So of course, the government has to be sympathetic to the needs of the community, to address the current difficulties that they're in. And I think the government has done a very good job in rolling out different anti-epidemic support measures, whether it's through the banking system or through the fiscal measures. And they actually have the ability to do that. I don't really see any need for the foreign reserve to be used for expenditure purposes, especially from the financial stability point of view. We've actually done quite a lot in terms of helping the SMEs. For example, together with the banking system, we've rolled out the pre-approved payment moratorium for the loans for the SMEs, and this has been extended 2 times already.
When Money Matters continues, we talk digital currency and fintech with Eddie Yu. Stay with us. Welcome back. The mainland piloted their new central bank digital currency last year. Eddie Yu tells us how this will affect cross-border payments with Hong Kong. Let's move on to the new digital currency that China launched last year. How will this affect cross-border payments with Hong Kong?
It is a major development on the mainland. What they call the eCNY is actually mainly introduced for domestic payment use. But as you can imagine, the flow of people, the flow of business between mainly, especially the GBA, with Hong Kong is so large that if they introduce a eCNY in future, we have to be prepared that, for example, mainland tourists or mainland businessmen will come to Hong Kong and use the eCNY. We have already started a pilot test with the People's Bank of China, which focus on if the mainland person has got a eCNY wallet, can it be used in Hong Kong with Hong Kong merchants and Hong Kong banks? We've completed that phase one already, and it proves that technically it's very doable and the pilot is very smooth. We are now talking about phase two, and I expect that this phase two will be completed this year. One is, of course, we will expand the number of merchants that get into the test for the use of eCNY in Hong Kong, mainly to cater for mainland tourists or mainland businessmen. But the other way around, we've got Hong Kong people who actually either live or they travel in the Greater Bay Area or other cities in China, that they might need a eCNY wallet. How do they get it? Can they apply for the wallet through the Hong Kong banks? And even more, how can they top up the amounts in the eCNY? Can they use the faster payment system in Hong Kong and do it just through your mobile phone, a few clicks, and then you will top up your eCNY wallet, and then you can use it in restaurants and other shops in China. That's actually what we are trying to do in the phase two of the pilot test.
Right, that's interesting. Is it possible for Hong Kong to have its own digital currency, which is just essentially the Hong Kong dollar digitized, right?
We have been looking at that for a few years already. In fact, the central bank digital currency, what we call the CBDC, is something that we tried to look at a few years ago. We are actually piloting the use of CBDC, including a digital Hong Kong dollar, for the wholesale use, including cross-border payment. For example, currently, if you do remittance with Thailand, Malaysia, Philippines, it's actually quite troublesome. It's costly, it takes a long time, you don't know when it will get to the other side. A pilot that we are doing together with a few central banks, Thailand, China, and also UAE, plus the Bank for International Settlement, is a multi-CBDC project, which means each central bank will issue their own CBDC. In future, if you do the remittances, you don't have to get it through the correspondent bank. You can just use the CBDC and do the conversion. It will be faster, cheaper, and it will be very conducive to trade finance as well. So if that pilot proves to be successful, the next step is, of course, to think about how to commercialize it, how to let the banks and the people of different economies to use it. And that will actually improve tremendously the current cross-border service that you are now having, especially in remittances.
Do you see a future where the Hong Kong dollar might be linked or pegged to the renminbi? And of course, they now have their own digital currency. Where do you see that going?
If you think about the technical arrangement, it's actually not quite possible to link a currency with the RMB, because if you use a currency board arrangement, you need the anchor currency to be open completely in the capital accounts, to have deep bond market that you can get in and get out very easily. And for that, I think the RMB and the mainland capital control is still posing technical difficulties for any change. But basically, on the design conceptual level, we don't think any change is needed.
So Hong Kong has really been trying to be a center for fintechs,
Right.
for startups. And there's always been competition with Singapore, right?
Right.
So given the backdrop of changes in the law, data security here, how do you ensure that Hong Kong is still a competitive place for fintechs to be?
We are already at the forefront of the global fintech scene. You know that we've introduced 7 smart banking measures a few years ago. In fact, if you look at the change of behavior of people in the last year during COVID, we now got a registration of 7.5 million users on the FPS, which represents a 70% increase in registrations. And that's very significant. In the next few years, we will focus on 3 areas. The first is about even wider use of technology in banking operations, whether you're talking about data analytics for credit scoring, or the use of technology for regulatory compliance. For example, if more people, when they use government services, they can just pay by FPS, that will be a lot more easier. The second part is about data, because if you want financial innovations, you need to have data, which serve as the ingredient for them to cook their product. We are now introducing a commercial data interchange, which aims to create a common platform so that especially the SME can, if with their approval, the banks can access this common platform to get the so-called digital footprint so that they can base their credit scoring on data instead of just on collateral. That will benefit many people. We have been working very closely with the Privacy Commission to make sure that all privacy laws are observed, and any additional suggestions, comments from the Privacy Commissioner can be built in when we build the interchange, so that the privacy concern that you mentioned can be addressed.
The other thing we've fallen behind with compared to the mainland, I think, is green bonds, green investments, that type of thing. So where is Hong Kong when it comes to this?
With the government bond program, which is actually quite a big one compared with other Asian sovereigns, we've actually attracted the ecosystem here. Because they need to serve the government in issuing their bonds. You've got the reviewers setting up their offices here. You've got the DCM desk of the investment banks bringing in the green experts to advise the government. You've got the distribution network that can access the green investors. Think about it. If in future, when the mainland says that, hey, in order to achieve the 2060 carbon neutrality, the corporates in the Greater Bay Area might need to access global capital, which is the best place that they can try out in that access. It's got to be Hong Kong, because we use international rules.
Okay. Thank you for your time, Eddie.
Thank you very much, Melissa.
Picasso's distinctive style captures the surrealist photographer Dora Maar sitting in a chair. The geometric portrait, titled Femmes assises dans un fauteuil, fetched a better than expected $12.9 million. The multi-million-dollar artwork was one of many high-end pieces that went on auction. From Banksy to Andy Warhol, David Hockney to Damien Hirst, some of the biggest names in modern art were available to those with deep pockets. But the Picasso was the auction's star attraction. Dora Maar was Picasso's lover and muse during the Second World War. The auction house says their tempestuous relationship is reflected in the intensity of the painting, a very cropped composition where Maar fills much of the space. The work came at a difficult time for Picasso and for the world.
It's kind of Picasso's own lockdown in a way. He is in occupied Paris, 1941, a really tough time in the war years, together with Dora Maar and just painting her again and again, the intensity of their relationship. But as is always the case with Picasso, when he paints one of his women of the kind of key decades of his career, he puts himself into it. And you see that very much in this painting too.
David Hockney's tall Dutch trees after Hobbema, expected to fetch up to $11.7 million, was gavelled in at a disappointing $6.7 million. It was inspired by the avenue at Middle Harness, a work by the Dutch Golden Age painter Meindert Hobima. Hockney's interpretation uses his signature vivid color palette rather than the gloomier shades of the original.
We here consider him to be a British artist, from Yorkshire, but he moved to California very early and so is collected very heavily and is very well represented in the big institutions in the United States of America as well.
Other notable works include this painting by Banksy, a parody of actress Demi Moore's iconic magazine cover for Vanity Fair. It sold for a disappointing $3.6 million. But Banksy's most iconic painting, Girl with a Balloon, soared, nearly doubling the estimate at $1.5 million. Despite the disruption caused by COVID-19, sales of high-end art have not dipped.
The demand for great works of art by the major masters, Picasso, of course, being one of them, but important works across all periods actually continues unabated.
Due to coronavirus restrictions, the auction did not involve a crowded sales room. Buyers did not attend in person and made their bids online or over the telephone.
That's our show. Next time on Money Matters, two stock pickers go head to head. Good night.